All right, I'm here with my business partner today. Beautiful Austin, Texas. So I got this question earlier. This is Jeremy, by the way. He's sitting in the pool. It must be nice to have a job where we can just shop real estate and sit in the pool in the afternoon, huh?
No work.
We're doing plenty of work. Trust me, this guy never puts his phone down. So the question I got today, dude, from an investor was, does it make sense to wait to invest in multifamily because we're not quite sure what interest rates are going to do, or should I get into the game now? So his question was, cap rates are low, I fear interest rates are going up, I think I should wait. Talk about why we're not waiting in terms of, I want to know, like, he's our head underwriter, this guy's a freaking genius when it comes to the numbers and stuff. Fundamentally, why it still makes a lot of sense to be buying these assets in 2022.
Yeah, I mean, we obviously have a lot of connections and other folks that were, following along in the space, economists. So when we speak to these numbers, we feel pretty confident. And even though caps are kind of at an all-time low, you still have lending that is pretty efficient and affordable right now. Although rates, are forecasted to increase, we still see enough demand, like you see here in Austin, for these high multifamily assets that are still yielding a good project return. So to answer the question of waiting versus investing today, I think you have to find the right operator who's operating in the right markets. We particularly like that kind of B plus space, and even the A space as well. And just to make sure that when you're looking at the numbers, and that's where I start. Not everyone starts there. But after you get past the know, like, and trust, are they making fair assumptions with their exit cap rates, with their refinances, if it's projected in? And first and foremost, the rents day one need to be in line with what's realistic for the market and that asset type. So there's still plenty of money to be made. There's different classes too if you want to take some risk even further off the table, for Class A preps and things like that. So,
well, I mean, I see cap rates are low, but also the markets we're shopping in, rents right now on when we go in and what we call turning a unit or renovating a unit, we're seeing 30% rent increases, right? 30%. So yes, even though we're buying in a historically low cap rate environment, right, we're able to increase our yield on that investment because of how much, honestly, there's so little supply in terms of apartment units for rent that the demand is there, right? So fundamentally, the point is that it still makes a lot of sense because yes, we're having to pay more, but we're getting a lot more.
Yeah, and to clarify that even further, we're not assuming the rents and organically will continue to grow at 30%. We're saying if we can bring this asset to where it is today, and in even a year or 2 years' time, depending on how many units the asset is and the size, what does that look like? And so we're still taking what they're getting today and forecasting that out over 12, 24 months. So just make sure that that's good too.
And lastly, the only thing I'll say, and I said to this guy too, was like, listen, he was actually he was looking to put deals together himself, not just passively invest. But I said, hey, if you're not doing deals in today's market, you're not going to be doing deals in the next market cycle, right? Because great operators and great investors always know how to put together deals, right? I mean, yes, there might be a time to kind of sit and wait, but at the same time, like, everyone's kind of waiting for the downturn or the next dip. And if you're not known as someone who can close deals, right? If you're not someone who can raise the money now and you don't have the trust and relationships now to go do deals, there's not a shot you're going to be able to go do deals in that next cycle, right? And so, you should not wait. You should get in the game now because by that time it's going to be too late. I mean, it's not like, you're going to be the only one who's figured out when the market dips. Like, it's not going to get less competitive when that happens. One of the best times to get into real estate was 20 years ago.
We'll be seeing the same.
Next best time is today. That's right.
So, yeah, interest compounds. We're anticipating any corrections already today. We're trying to forecast it in with sensitivity tables and see where things are going.
And remember this about real estate. What we're buying great assets that we know, based on inflation, based on, just rents are going to go up over the long term. They're $1,400 for an affordable, even more than that, right? $1,800 right now for a 1-bedroom in Austin. 10 years from now, it's going to be $3K. Due to inflation, due to demand, rents will be $3,000 for a 1-bedroom in Austin, Texas. No doubt about it, 10 years from now. So if you can buy great assets and you can get good long-term fixed debt, your tenants are paying down your mortgage so that you're building equity that way. Honestly, you can't. It's hard to lose if you play long enough, right? If you're playing the long game and you're not just in it for a quick buck. It's the greatest wealth builder in the country. I mean, look at this city. I mean, none of this was even here 10 years ago. And so if you're buying in places where you know demand is going to continue to grow, Texas is a great market. We love this market. It's hard to lose. So here's the final question. Should folks wait until something, I don't know, for a correction or for whatever people think is going to happen, or should they get in? Honest answer.
Don't wait to buy real estate. Buy real estate and wait.
Boom. There it is. I love that. Think wealthy, friends. Hey, if you want a life like this, come invest with us. We'll help you build wealth together. We're looking for deals, capital, good partners that can enjoy days like this with us. Think wealthy. Cheers.